would you like crypto dollars in the palm of your hand that the bank can't seize and the government won't take? And asked anybody in Syria or Afghanistan, they would say in a heartbeat, yes. So over the near term, the traders win, but over the long term, the hodlers win. If you live outside the US, this is a lifeboat. It may save your life. It'll keep you from being impoverished or murdered or left destitute or starving, right?
Michael Saylor, Macroeconomics of It All. MicroStrategy investor Michael Saylor has been working towards educating the general public regarding the ghost that is cryptocurrency for years now, making it ever so simple thanks to his practical approach. In his latest interview, Michael talks all things macroeconomics, politics, the future of crypto, and whatnot, and all of that in super layman terms. So don't forget to watch to the very end for Saylor's exclusive insight into the current environment and future of cryptocurrency, current macroeconomic environment and inflation.
Well, I think if we look at the macroeconomic environment, the inflation and currency devaluation is the number one issue. And I will give you an interesting statistic, Guy. Do you know that Zillow thinks that my house is 305 times more valuable than it was in 1930? So a lot of times, if you go look at Bureau of Labor trade statistics, they'll tell you that the dollar's lost 95% of its value over the last 80 years. But that's actually not true. The dollar's lost 99.7. Inflation's an issue, and I figure the CPI is 8%, but the real inflation rate in assets is 15 to 20%. We know that all these currencies are weakening, right? Every Eastern European currency is weakening. The yen is weakening against the dollar. I mean, everybody is weakening and the dollar is losing 20% of its value. So
the most desirable property. With uncertainty and yet still a lack of knowledge with crypto still being in its infancy, the regular Tom, Dick, or Harry is still confused as to what's the best avenue for investing their money in. Let's hear Saylor's take on the matter.
And now the debate is just what's the most desirable property? Is it land? Is it art? Is it sports teams? Is it gold? Is it Bitcoin? Is it some other crypto, in the next Tesla? And are you going to buy that? And so that's the investor attitude. I think your real choice is just, do you want to be long property? Which property? And of course, my attitude would be you should be leveraged long property in an inflationary environment. You want to be short the dollar. By the way, you want to be short the dollar because it's like negative 15% real yield. But I even more like to be short the peso, which is probably a negative 35% real yield. So you want to be short a weak fiat currency via debt. And then you want to be long a property, ideally a non-sovereign store of value. Or if you're going to hold property in a nation, hopefully you either own the country or you trust the country.
Is MicroStrategy a hedge fund? When the interviewer hints to Saylor running an alleged hedge fund, Saylor is quick to shoot him down. Let's hear it.
It's not a hedge fund because we're not hedging. We're just unilaterally long. It's not really a hedge fund either. Hedge funds actually don't allocate more than 2% of their capital at any one position. We're 1,000% allocated to one thing. It's hardly a hedge in any way. We considered art and real estate and commodities and every equity in the world and 15,000 other cryptos and every precious metal and every other strategy and all the derivative strategy. And I have experience with them all. And we picked the one that we thought was engineered to be the soundest treasury reserve asset.
Are digital assets really better than mainstream ones?
It seems to me that it's pretty obvious there's $100 trillion worth of monetary energy or wealth that would be better served to be sitting in a synthetic digital asset like Bitcoin than to be sitting in real estate or gold or equities that are currency derivatives or other kinds of weak currencies.
And we believe with this inflow of information and knowledge, thanks to crypto enthusiasts and investors such as Saylor himself, the general public is quickly becoming inclined to, if not invest, at least look into digital assets as the future of secure investment. Can't wait to see where the future will lead us. Political endorsement for digital assets.
The political environment on one hand is a massive endorsement for digital assets by the White House last week when President Biden said 40 million Americans need digital assets and we're going to embrace this. And I think a massive advertisement for Bitcoin with the Ukrainian-Russian war, and especially the sanctions where we seized $300 billion worth of treasury assets assets from the Russians. I think the Chinese have $3 trillion worth of assets, and that might have got their attention. And probably pretty much the conclusion is, if you're any nation state in the world and you think you might ever be in conflict with another nation state and you're holding their credit derivatives or their currency derivatives or their currency or gold in one of their banks, that's not really proper anymore. I think that's got everybody scratching their head saying, I don't trust the currency as a long-term store of value, and I don't trust my assets to not be seized. What am I going to do? And then right in the middle of that, you see things like Bitcoin.
And to think a literal war would positively impact the growth of cryptocurrency. The world is truly changing, wouldn't you say? And in this changed world, it's super important to keep an eye out on the factors that influence this game altogether. Which brings us to the importance of macroeconomics.
That's like, do you really want to own a rancher in Argentina when the peso loses 99% of its value? And if the government says you can't export your beef, well, I mean, it doesn't look like it's all that safe a bet. So I think that every investor today needs to be a macroeconomic analyst. If you don't take into account macroeconomics, then you can come to the wrong conclusion.
And Saylor has emphasized this importance time and time again, such as in this tweet from some time back. The true leverage.
From our point of view, what we took a stock that was the bottom at $90 a share. It was 120 when we started this journey, and we've driven it up by a factor of 4 or more, and we created billions and billions of dollars of shareholder value. What's the lever? The lever is Bitcoin is the only scarcity in the universe. It's capped at 21 million coins. 1,000 years from now, there's every reason to believe there's 21 million of these things. And if you compare that to gold or silver or oil or natural gas or soybeans or land or cotton or whatever you want to call a commodity, they're all being produced per demand as the price goes up, and Bitcoin isn't. So the leverage here is you short the currencies. You basically borrow $1 billion at 2 or 3% or 1% interest, and you borrow that because the currency is losing 15% or 20% of its value a year. So when you grab $1 billion that's got a negative real yield of 15%, you already got $150 million a year benefit there. Then you flip it into a hard asset. I'm not going to call it a currency, because to be a currency, you have to be able to transfer it every day with no tax event. So you convert it from a weak currency to a hard property. Buy $1 billion of property, and if the property is getting more valuable and more in demand, and Bitcoin's going up 100% a year on average for 12 years. So we're trading something that costs 3% money for something that yields 100%, or something that's got a negative real yield of 15% for something with a positive real yield of 100%. You're arbitraging the difference.
The battle between hoarders and traders. Since the very inception of crypto itself, we have seen the ongoing debate regarding whether it's more profitable to hold crypto or to trade it. Let's hear Saylor's 2 cents on the matter. Interesting alternative crypto technologies.
There's a battle between East and West, and there's a battle between the fundamentalists and the traders, the hodlers and the traders. The hodlers have spent 100 hours studying this. They've concluded this is engineered perfect property or perfect money. They've got a 10-year to 100-year time horizon. They're going to hold it as generational wealth transfer. The traders think it's a risk-on asset, and they're thinking that I'm going to short it to hedge out my NASDAQ position. And they haven't spent 100 hours thinking about it or studying it. They're just fast money. So over the near term, the traders win, but over the long term, the hodlers win. And then in the East versus the West, like Manhattan, Upper East Side, and you've got a lot of money in the stock market, you feel very comfortable. You like your life and you like your models because they worked fine for you, But if you're living in Ukraine or Russia or South America or Kazakhstan or China or fill in the blank, or Afghanistan or Syria or Lebanon or Turkey, the Upper East Side, stock portfolio isn't working for you. You don't have that option. Your option is you put it into Bitcoin or you lose it all. This means different things for different people.
Crypto today and the future.
I think if you look at the environment right now, there's a massive demand for two things. Cryptocurrency in the form of a stable coin. If I have crypto dollars sitting on a network and I can grab $1 million and move it at the speed of light, and I can do it without generating a taxable event, then that's very interesting as a payment rail, as like call it your checking account. And then crypto property, my savings account. So Bitcoin is obviously the king of crypto property. If you look at where the action right now is, it's in the stable coins that are exploding, and you can see this very interesting market dynamic between Tether and Circle and UST and what Terra Labs is doing. And if I walk down the street and I ask people, everybody in Africa or Asia or whatever, would you like crypto dollars in the palm of your hand that the bank can't seize and the government won't take? And asked anybody in Syria or Afghanistan, they would say in a heartbeat, yes. Even in China, everybody in China wants crypto US dollars, right? Everybody wants dollars. It's not because dollars are a great long-term investment. It's because dollar is a much better short-term investment than every other currency on earth. By the end of the first Biden administration, I think we have 80% of the regulatory clarity that you need to understand this. That means that from the year 2024 to the year 2028, 80% has been figured out. And by the year 2030, maybe 90% has been figured out. And at that point, I think it's just kind of like a growth industry. I mean, it'll be a nice growth industry 2030 to 2040.
With that, we come to the end of this video. Consider subscribing to join in on all our future content.